All right, what's going on, everybody? Today is July 6th. We're going to go over today's price action, specifically in Apple and in Tesla. We can look and see how our levels did. We can also look and see what levels we come up with for going into tomorrow, Friday. So let's take a look. Right now, we're looking at Apple on the 30-minute time frame. And as you can see, since we made that high back on Monday, we have yet to come back into that area yet. And as you can see here, we actually took that swing high before making our move lower. So what I do is I just slide them over, always identifying the highs and lows of a specific range. As we know, that's where liquidity sits. It's a good spot for reversals to take place. So but anyways, if we can go through this briefly here, we had an imbalance here. This was on Monday morning. Imbalance forms. Price gets back up into the imbalance and rejects down lower. Creates an imbalance in the process. Creates another imbalance here. Price trickles through. We open up in that imbalance and reject hard on Wednesday. We fade just a hair. There is a imbalance here. Again, this is we're going over previous days, so after the levels are used and abused, I get rid of them. So we had the bounce as a result here, back up into this imbalance, which we then rejected again, created a high wick. So I'm going to note that when price gets back up into that area, that's an area that you look for. You'd like to see an imbalance candle, so a candle like this or a candle like this, to go through that liquidity to kind of give you an idea of what's to come next. And then following that high and rejection, we come back down, we create another imbalance here, and we trickle lower here, take out this little swing low right here, and we kind of just chill out for the rest of this day. So that leads us into today, which was the 6th. So obviously we know, hindsight's 2020, this level is irrelevant. It gapped down overnight. So what we would do instead is just draw bearish imbalance right here, right? If you start looking at gaps from that perspective, kind of changes the way you think about them. So this is a void. There's not much going on in here in that overnight session to drive price down. So we can also remove this area of liquidity, which we took, in fact. So we start to trade on. We trickle down. We finally find some support. So that was the most important and hardest thing for us this morning to do, was just to kind of wait for an actual bottom to be set, and not try and jump the gun at all and wait for some sort of confirmation for us to enter in onto that. So obviously we know this level did play true the first time around. This was an inversion right here in the meantime, and we're going candle by candle, so you'll see. So as we make our way down, we get into this level here and we bounce back up into this previously bullish, now bearish imbalance. We reject it, come on down lower, we lose the goose here, cut that one out, and we fade into our lower level right here, which was a imbalance formed on Thursday the 29th. We hold on to this. The wicks are going to give you the heart attack, but the bodies are the ones that you need to follow, the ones that are going to tell you the story. And from there we bounce, create an imbalance up and through this level here, and I will edit it right here to show you. Okay, so that's a level that we have moving forward. That should act as a support. Yet again, another imbalance here up and through this level. And as you can see, at this level we did kind of run into a little bit of trouble, but after about an hour we got through it. Price runs up back into this level here, which is our one standard deviation from the move that took place on the 22nd. So from that low to this high, that was our one standard deviation projection. So that's why I like to keep the range and the levels on. And we make our way, we create another imbalance here, get up into that one standard deviation, we pull back right back into this imbalance, and we take off again. This time running into some trouble right here on this bearish imbalance that was formed on July 5th. So that's where we ended up today. Ran into it right near the end of the day and kind of stalled this out. In the meantime, we can look at it from this perspective. We do have a support level right here that formed near the end of the day. And again, I should just zoom in and just make it more clear here. Wick, body, wick, nothing going on in between here. That's going to act as our support, okay, or hopefully our support. And the reason why I like this strategy so much is, not only is it extremely accurate, but at the same time, it's always kind of mapping out the criteria for your trade. The way that I use it is when I form the imbalances, especially on shorter or smaller ones here, I could, just take an entry off the high, use the low as my stop loss. And on the flip side, just knowing that we have another one up here, that would be an area to profit take. And of course, if you get stopped out, that's okay. It's a part of the game. You got to get used to stopping out, or you're not gonna be able to sustain success. You're not always gonna be right, and that's okay. But as long as you have some sort of a plan in place, that is the differentiator between people who can do this and make money and people who cannot. So that is Apple. Just looking forward into tomorrow, we do have some support levels down here. We have this liquidity or swing high up here at 192.98 right there. So that could be an area of interest, a place to target. I haven't looked at the flow yet, so I'm not particularly sure where or what the flow was looking like. But so that's what I have for Apple right there. Now we're going to flip over and we'll take a look at Tesla. Just a quick timeout here. If you would like this information to be emailed to you daily, check out my newsletter, Markets with Mando. I'll put the link in the bio. I usually choose these names for a reason, and it's usually because they are the larger names in the S&P. So that is good. That's why I chart them. I trade SPX and ES or NASDAQ. That's about it. But I do chart other names just to kind of get an idea of, how much room we might have in either direction. Kind of, again, helps give some additional information when looking into taking a specific trade. So, but anyways, we'll go into Tesla quick. There's only about 2 minutes left in this recording. So if we take a look, we had that huge gap up on Friday, right? Or was it Monday? Yeah, it was Monday morning. So we gapped up large Monday morning, got into this level here, which was actually a resistance level that I had from long ago. If I go back and look, let's see how long it'll take us to kind of scroll on back. Rejected here. Let's see, when was Tesla this high? A while ago. This will be a quick one, so I don't mind going back and showing you guys where it was actually formed. Okay, so ready? Wick, large body, wick. This is your imbalance. We're going down, so I have it as red. It's going to act as a resistance level, and it did as we zoom all the way over. So if we take a look here, obviously we get to the high, wick through. No dice, didn't break above. We pull back down. Now this is the reason why it was green when I first showed you. We actually held this level multiple times as support. So that's when you get the imbalance was filled and you got that resistance flip to support. So I'm going to change that to green just for viewing purposes. Now we run up, closed the day yesterday above this level. Did not quite get to this area of liquidity just yet. So as you know, we had a bunch of different data points that came out this morning, so that obviously plays a role in price action one way or the other. So now again, here is a little look at how you can use these levels. So of course we had the gap down. I'm going to consider that as a resistance level over this period of time. It was enough juice to get it to gap down in this direction. So but as this is pre-market, I'm not up at 4 o'clock in the morning looking at this stuff, but by the time you get to your computer, oftentimes it's good to see that one of your levels is still playing out, right? So this was supposed to be, or was to be viewed as a support level. But as we see, price drops down, gets into this imbalance right here that was formed on July 5th. And obviously we bounced from there the first time, and again the second time. Price knifes down here in the pre-market, holds on to it for a bit, bounces back up. Where does it bounce? Previous support, turned resistance right there. Boom, as you can see, wicks up, and down we go. So obviously, hindsight, the third try through this level, we did make our way through, and there are some bearish imbalances for me to throw on the chart right here. One right there, wick, body, wick, and another right here, wick, body, wick, inside this area. And as you can see, off open, price did get up into that imbalance and reject hard to the downside. This level only held true for half a candle here as we got into it, and we did bounce momentarily at least before ending the candle on the downside. You could have looked at and used that level as a level of resistance, but we also did create this imbalance right here, and this is the one that I was looking at. Now, why did price bounce here? It lost support. It should have went down lower, right? So we actually had a swing low right here. Again, like we mentioned before, when price makes its way through an area of liquidity, oftentimes that's when stops are going to get triggered and reversals will take place back to the upside. So as shown, broke through, price recovers, bounces higher, gets into this resistance level here that was formed at 9:30, rejects yet again. Now going into tomorrow, the level I look at here would be 1, we're going to slide this over. This is our new swing low. That's where liquidity will be taking place. Ooh, and let's flush that for now. Slide on over. Okay, this level here to me is as good as gone. So now we're just dealing with some resistance. Obviously, we have a huge gap from that Monday morning open, but I'd like to see, if you're bullish, you'd like to see this hold and flip as a support level going into tomorrow. Start to attack our way up here. Now, this level here, not completely filled, but has been tested. So that's at least worth noting. I used to do it where I would just change the red to, a different color red, and just make note of, that it was hit multiple times. I don't do that anymore, but anyway. So these are the levels I'm working with on Tesla for tomorrow. Of course, there are a few, but we are looking at a pretty large price range here. So these are the levels that I have. And of course, that high right here at 284.25. That's the highest level I have. And honestly, I have a lot of space up in this area. So getting over that would be crucial for bulls to send us even higher. But that's all I have for today. If you enjoy these videos, just like it, subscribe, do whatever you got to do. And I'll be doing these more often now that I'm back. So I will talk to you guys soon.